Demand for data centers right now is going to be higher and higher and higher.
That AI growth is where every investor is looking.
This is not a popular name. This is not a name that's going to be making headlines.
But don't miss the other companies that could benefit from this big boost in AI spending.
Vital player in building out those data centers.
MarketBeat's Gabriel Osorio-Mazzilli shares a list of 3 construction-based companies that could see a big financial boost from all of these data center buildouts.
This one provides a lot of chemicals, a lot of the materials like plastics.
Maybe not the first thing that would come to mind when you're thinking about building data centers.
You need machinery, you need equipment.
The names you might be missing in the build-out of the AI revolution. Let's dive in. Gabriel, so great to have you back on the show, this time talking about some interesting plays related to all of the increased data center construction. If there's anything that we're learning right now from this earnings season, it's that there is a lot of investment going into data centers right now.
That's right. If you look at the top 5 hyperscalers, they've been spending over $500 billion this year alone into building the onshoring infrastructure of semiconductors, chip making, and of course, the model training facilities, which are data centers. So I think that while everybody's focused on those semiconductor names and the top of the line technology companies, there are a lot of opportunities in a lateral place when it comes to the companies that will actually be there building those data centers. And I think that if you can land on the right names, there's a lot of tailwinds and a lot of upside in the coming years.
Yeah, we recently had a video on the channel talking about picks and shovel plays for data centers and for AI, but those are different. Those are the companies doing the cooling and really the direct owners of the data centers themselves. These are really, like you said, lateral plays. It's the equipment, it's all of the things behind the construction industry, because at the end of the day, yes, these data centers are all about the chips, but they also need concrete and they also need, piping and wood and different things like that. So regular building materials. And that's more of the stocks that we're talking about today. So let's get into that first company on your list of companies that could really benefit from all of the investment happening in data centers right now.
Right. So the first pick I chose is DuPont. That's the stock ticker symbol DD. And, this one provides a lot of the materials like plastic, concrete, and other chemicals involved in these infrastructure construction projects. And the fact that DuPont is not one of the exciting names in the market has gotten it down to only 78% of its 52-week high. So with the news of data centers coming on, as you know, the demand for data centers right now is going to be higher and higher and higher, yet the supply isn't really there. We don't have the infrastructure ready to host all of those data centers that are going to come in the coming years. So DuPont in this case could be a vital player in building out those data centers. And that discount to its 52-week high is something of a gap that should be filled and something that a few analysts on Wall Street are already looking at as far as an opportunity in the coming years.
And let's look at the analyst trend a little bit more. Like you said, this one is only about 50% of its 52-week high. Are analysts expecting it to reach that high again anytime soon?
Right. So when you look at the consensus view coming out of Wall Street, every analyst seems to look at DuPont as a moderate buy valued at around $88 a share, which isn't really that exciting. But then you look at the recent revisions coming out of the Wall Street spectrum, right? As far as DuPont reporting earnings and all the data center theme coming online, now we can see an analyst from the Royal Bank of Canada assigning a $94 per share price target, otherwise a 35% upside potential. Now, that would bring the stock back near its 52-week highs, and then a sudden breakout out of it could trigger a lot of new institutional buying. As you know, most of these funds, they're long only. They rely on momentum strategies and get triggered buys whenever a stock breaks out a 52-week high. So I think that that momentum and that upside gap to be filled and the new attention that DuPont is getting from Wall Street are all mixes to be put in this bullish cocktail, if you will, for the company that will be, again, a vital player in rolling out those data centers across the United States.
I want to push on that point a little bit more. I think maybe some investors watching this might be wondering, well, is there a direct tie between DuPont and any data center projects out there? Or is this kind of more of just a theory of, in theory, this company should be getting some of the business and seeing some of the benefit from data centers? Are there any direct links here?
Well, there isn't a specific announcement, right, for new contracts or anything that points to DuPont already building data centers. I think that investors can look at the bigger picture and notice that the XLI or the Industrials ETF has 2x the S&P 500 over the past 6 months. And I think there's a reason why. Now, when you dig into that ETF, DuPont's positioning and that broader theme for data centers, it becomes pretty clear. I mean, DuPont provides a lot of the, like I said, chemicals and raw materials that are used in the early stages of the infrastructure projects that we all see around. And specifically right now, with the current administration investing billions and billions of dollars into new infrastructure projects, into onshoring those data centers, and I think that the market is kind of putting this together in a way that says DuPont could be one of those stocks that closes that gap and fulfills on those Wall Street analyst expectations.
Yeah, that ETF is a really interesting play when you look at all of the investment going into AI right now. If you're looking at other ETFs that could benefit in this sector, make sure to check out our latest free premium article on marketbeat.com. It's just for our YouTube viewers. It's a list of 5 ETFs that can help you invest specifically in AI and energy infrastructure stocks. You can scan the QR code now or click the link in the description to get that list totally for free now on marketbeat.com. Gabriel, that first company is really interesting. It's one we've not covered on this channel before. And I'm excited about your second company too, because it's also a new name, at least for us covering it on this show.
So that second name would be Martin Marietta Materials, stock ticker MLM. And this one sees a lot more bullish price action for a reason. I want investors to focus on the fact that this stock is now at 95% of its 52-week high. And I think that preferential treatment comes from the fact that this one is first in line to get paid on top of all these projects that are coming online. And the reason is that before DuPont provides its chemicals and plastics and sealing materials, right? Martin Marietta is right there to provide the first materials that come before even a foundation is laid. So I think that markets are connecting the fact that Martin Marietta will be first to get paid, therefore see the expansion in EPS and other financial metrics, right? Therefore, they're going to reward it with that 95% of 52-week highs, which is essentially a pretty bullish price action. So other than that, I think that investors can see the fact that this is not a popular name. This is not a name that's going to be making headlines a lot of the time. It's not going to be on Bloomberg, on CNBC pretty often. And that gives them an advantage to get into this stock before it becomes too hot for its own good. And even though it's at 95% of its 52-week high, the same principle applies. If it does break out into a new high, I wouldn't be surprised to see more institutional buyers coming in, new revised sentiment from Wall Street pointing to the stock ceiling being a lot higher than where it is today.
And this is not a tiny company either. Again, it's trading well towards its high right now. It's a larger company and it's been around for a while too. Do you think there are some investors who are already into this company, or is this maybe a newer name for some retail investors?
Well, it is pretty hard to tell whether retail investors are exposed to the stock. I think that they can look to the institutional side of the equation and notice that as of August 2025, those from Geo Capital have built an $831 million position into this stock. And, from the gap between institutional interest to retail interest, I think it's videos like these. I think it's theses like these that get out there in the market and make investors realize, okay, this might be an opportunity. And even though nobody's talking about it yet, I think it would be profitable to consider it at least, even though it's at 95% of 52-week highs. As we know, it's all a matter of time, a matter of attention. And as the new data center rollouts come in, I would expect the bottom line earnings or even the top line revenue for Martin Marietta to see some expansion as the demand comes through. And remember, this is not a 2-quarter or 3-quarter thesis. This is a multi-year project, right? You can look at companies like Intel. They've been building fabs for semiconductors since 2022, and they're still not ready. So think about the massive amount of time and tailwind and investment that has to go behind rolling out those data centers that aren't there today and all that demand that will come. I think markets are pretty right and spot on in pricing in this stock near its highs today considering where the financials could be tomorrow.
Yeah, that's a really good story for follow the money long term. This isn't going to be a short project. This income for some of these companies could be coming in for years down the road. That's why this is such an interesting concept for me is following all of the investment in data centers. And that leads us to the last company on your list, which is also maybe not the first thing that would come to mind when you were thinking about building data centers.
You're absolutely right. Not a lot of people would think about this stock, but it is a pretty key player in this build out as well, and that is Caterpillar. Now, this stock trades in between DuPont and Martin Marietta at 90% of 52-week highs. And I think that if you bring back the reasoning of who gets paid first, of course, Martin Marietta will get paid first because before even the foundation is laid, like I said, you need those materials on hand and delivered in order to start a project. Now, once you have those, you need machinery, you need equipment, and that is where Caterpillar comes into play. When you look into the Wall Street analyst expectations, where earnings per share might go, and the fact that Caterpillar didn't shine out of the group, right? In the latest quarterly earnings, the stock still traded pretty well in the following days. And I think that traders are looking at the stock thinking, well, we might have not gotten the best quarterly earnings that we were expecting, but we're looking into the future. Markets are forward looking. And again, if you think about this theme in the next 9 months, 12 months, or even 2 years out, I think that you're going to see Caterpillar shine along with all the other names on this list.
Yeah, I think Caterpillar has come up on this channel before as just a strong company to look at because their earnings are doing well right now. And I think other analysts are looking at all the investment in construction right now and thinking of companies like Caterpillar for that. What about this company makes it a really strong play? Again, I think this is one that's been around for a really long time.
Right. And it's exactly that market share that makes Caterpillar interesting. You may have other stocks in the machinery equipment area, industry, and of course, those might see a lot of demand coming through, but the one that can really deliver on the amount of demand that we're talking about here for data centers, I think Caterpillar is second to none. I think it's scalability, its economies of scale, its market cap, and its wide popularity in the stock market align it to be one of the winners when these data centers start rolling out. And I think that's why a JP Morgan analyst has recently placed a double digit upside on top of the already nice, attractive price action that Caterpillar has had, right? The consensus, however, is still at $444 a share, which isn't really that much upside potential. But looking at the recent earnings and the reaction from that JP Morgan analyst for around 35% upside, I think that's where investors can see the theme and say, okay, if Wall Street analysts are willing to risk their reputation and their careers even in making this bold of a call, there might be something behind it. And remember, the XLI industrial ETF has been outperforming the S&P 500. Caterpillar is one of those names as well as DuPont and Martin Marietta. So when you look at the broader outperformance and connect it back to the data centers, sure, Caterpillar's earnings recently might not have been that great, but again, if you look into the future, you might see the connection there and justify Caterpillar being inside your watch list.
And I think with Caterpillar, it's important to note I know this video is about data centers and the investment going into those and the companies it could impact, but Caterpillar in particular also could be impacted by the new renewed investment into gold mining companies. There's a lot of different gold mining stocks that are really seeing a lot of investment and interest from investors out there, which means they have more capital and expanding more. And Caterpillar is an instant connection with those companies as well.
100%. And if you look at the lithium prices recently, they're up double digits in the past month alone. And keep this in mind, 75% of the global lithium supply comes from China, and China has recently halted production until further notice, sending the prices higher in the open market. So as you say, we have to get lithium from somewhere because those data centers are going to need lithium. Those chips and those semiconductors and those AI models are going to run on some sort of lithium demand as well. So we need that supply. And as you mentioned, Caterpillar might be a key player in those when it comes to the mining sector. to respond to those higher demand figures.
Yeah, a lot of interesting reasons to consider this company, and just an overall interesting list today for retail investors to consider. Some names we don't often talk about. They're not the big, shiny AI names that we see in headlines all the time, but there's definitely some growth and some upside to be found in these names too. Let us know what you think. Are there other companies out there that you're looking at with all of this investment into data centers, the investment into other kind of growth happening into other sectors too? What other companies could benefit? And are you looking into any of those plays? Share those stocks in the comments. We'd love to hear what you're looking at right now, too. Thanks again for watching, everyone. And as always, happy investing.